Today is CPI day. You can see August 11. This is August 11, 2026, or it's 12th, sorry, it's 12th August. So if you come here, we can see the CPI result that came out today. CPI result that came out today was, and let me see if you can see it. It was a bit I don't know what I can see. It was this was the focus. Can you see the focus? This is the most important thing here. It was 3.4. One thing I have to understand about CPI is anytime the CPI results comes out, the market starts moving up. The previous data was 3.5, so it was forecasted 3.4. That was why you saw this jump in gold. So gold started jumping before the CPI. Let's go to gold. Let me show you something about gold. You can see gold. Gold. I don't know the date that gold started moving up, but gold was on a huge crash. Let me see. Let's go to the 4 hours. I just wanted to show you something about all these data. Before gold was around here on a bearish move. When the CPI expected result come out, so they're moving up. So one thing you have to understand is that markets start pumping on the expected result. Because markets start moving up on there. They don't move up on maybe on the day. Many people just think it's that day. So there's the data have already priced in a very bearish. So the move started from 2nd August. Maybe that was when the expected result was published. So when that expected result was published, that was when the gold started moving up. So you have to always check when this expected, because now I'm looking for the next expected. Let me look for the next expected result now. Let's look from September. Let's go to September now. You will see that there is nothing there. I click on apply results. You see this is from September 1st to September 30. If you look at September 1st to September 30, you will see that, okay, this is the CPI. The next CPI we're expecting this. Usually we don't have any data here. Everything here is empty. The fund rate is coming on September 16. We don't have any data, nothing. So always check for that expected result because it's very important. It tells you what is about to happen. So that's that. So today we had an expected result and it came out as the expected result. So that was why you saw this gold crashed. Many pairs didn't even do well because they've already priced in the data. But assuming that the CPI came out, let me say the CPI came out lower than expected, maybe it came out 3.2 or 3.3, would have seen a massive jump in prices. Like that, it doesn't a massive jump in prices and all those things. So, or if it came out a positive data, would have seen a massive crash. So, what are we trying to say here now? So what we're trying to say here now is the markets have already moved. Let's go back to GBP. I don't want to show you something on this. Let's go back to GU because GU today is CPI day. This data is looking a bit dirty. So you can see we are bullish. Let me try and hide all this. Let me hide drawings. So you can see from the 4 hours, we are bullish on GU. I can use this and draw it. We are bullish from the 4 hours and go to the daily. We have been bullish all through. Go to the weekly. We are bullish on the short term, but on the long term we are consolidating. That on the weekly candles we are consolidating, but on the short term, let's say on the 4 hours, we are bullish. I can't really say if this is really bullish, but where we can confirm the bullishness is on the 1 hour. 1 hour we have been forming some higher highs. We expected this high to be taken out. I don't know whether they took it out today. They did not take it out. Let's bring up our grinds. So let's go to what happened at 7 o'clock. Because at 7 o'clock I saw something very interesting. Let's expand this. So if you come at 7 o'clock, immediately arrived at 7 o'clock, what did we observe? At 7 o'clock, we observed a consolidation of Asia. Let me label this as Asia. So at 7 o'clock, we had a consolidation of Asia. So that's why you are seeing this. So at 7 o'clock, we had a consolidation of Asia. So when I came in at 7 o'clock, I just saw a consolidation. So I did not see any entry. I did not see any entry at 7 o'clock. But at 8 o'clock, I tried to take some sales to take out the. First of all, I tried to take a sell to take out this first liquidity and take out the Asian. This Asian, I tried to take a sell. I got a loss, so I lost 1 hour. Let me say I lost 2 hours. So I lost 2 hours here. I lost 0.5%, 0.5%. That's 2 hours, which is it's not this. Why I took this short at H, because I saw the same thing here, but the advantage of this one is that this was at 7 o'clock, while this one was at 8 o'clock. I had expected it not to work, but I had a recovery buy because I was expecting it to fail. So I had a recovery buy. Let me see how. So I gained 1 hour. After losing 2 hours, I still gained 1.5 hours. So that means, or let me say I gained 3 hours. So after losing 2 hours here, I gained 3 hours over here. So that means I have a profit of 1 hour. How did I make this buy? I saw we are forming a bullish significance just before Asia. You see that we had a consolidation. This consolidation started from New York of the previous day. On August 11, we had a consolidation. So when you hit 8 o'clock, I was expecting a sell, but what happened was a buy. It broke. We consolidated here for a little while, and I started seeing this bullish. Can you see that bullish move over there? I don't know whether yes. Let me expand this. You see the bullish move. Higher highs, higher low, higher highs, higher lows, higher highs. That's how they took us out. They took these sales out, and they gave me a profit over here. So when we broke this structure, remember before this chart happened, I was seeing a daily resistance. So if I come here, you will see that there was a daily resistance that day. Where is our chart? Let's just take it us to where we don't want to do. So you can see we had a strong daily resistance there. So I knew that, okay, because of this CPI, they will try to target this daily resistance. So I've already drew this resistance before. So I knew that this resistance will be targeted because of that strong move that I saw at London time. Another time happens before 11 o'clock GMT plus 1. So I use GMT plus 1. So we have GMT time. If you GMT time, I'll say 10 o'clock GMT. That's from 6 o'clock GMT to 10 o'clock GMT, or from 7 o'clock GMT plus 1 to 11 o'clock GMT plus 1. So it's 6 to 10. So coming to the I saw this explosive move. They hit the institution level 1.3525. We have another institution here below, is 1.35. So the next zone I was expecting them to hit was this daily zone, which is at 1.3538. We have another institutional level around here, which is 1.355. But let me just mark it here so you can see. I don't know where they've gone to the institution level. Institutional level are quantum levels. And we see if I can do these settings here. So let me clone this first. So what we do is we clone it and we label it 1.355. So that institutional level is we didn't even hit that level. It was far above the daily zone. So there's another institutional level that the market might want to hit maybe somehow in future. So when I saw this jump happened around 10:23. So I was looking for more buys since I knew that okay, they've taken me out. So I knew that this is the first touch of the line. First of all, when I saw this line here, I didn't believe this line because we made, first of all, made a huge jump here. This was the second touch of the line, but before the London time, it hasn't broken this structure. So that was why I did not trust. I was thinking that maybe we might have a crash. But when I saw this level taken out, I now drew my first touch of the line here. So let me take it as my first touch of the line. So that's what I'm saying. Let me tell you the line I'm talking about. This one. When I saw this line taken out, where's my ruler? This is a liquidity zone. So when I saw this liquidity taken out, I knew that the next liquidity they're going to target is this liquidity. They will target this liquidity next. So when I saw that they've taken out this and they took it out with huge volume. So let me appeal my chart. So I'm going to come here and say this is the first touch of the line. This place you are seeing now is the first touch of the line. This is the second touch of the line now because it broke structure. First touch and second touch has to break structure. Before I started looking for entries at the third touch of the line. I would have taken an entry here, but before 7 o'clock, it was here I started looking for entries around this zone. Because now I saw that they've broken, and I saw another line. The problem, I knew that the third touch of the line would be around here. But let me just put it somewhere here as third touch of the line. Because we've broken structure, I started looking for entries, more entries to take buys. Trend lines are very important in trading, but people don't know. Trend line used to be a thing of the past. Yes, I believe that trend line used to be a thing of the past before the year 2016. A lot of you go and a lot of videos, they will tell you that it was working. Well, during 2016 or 2017, it stopped working. But I still believe that trend lines are working. It's just all those things that people are trying to sell their courses and say trend lines are not working. I don't know, just to sell a very difficult thing. Trading is very simple, it shouldn't be hard. So I saw this one, first touch of the line, this is second touch of the line. So I was waiting for the third touch of the line. So when I was looking for an entry around here, and you can see I caught the entry, which almost took me out. So how did I catch this entry? I saw this great push. This is what they call volume displacement. I didn't want to take entry here. I don't know why. I didn't like it, especially when we reached this level. I didn't want to take entry here, but it's very close. But it's very, very close. I wanted to take another entry here, but it was too close for me. I didn't like that entry. I did not like that entry. Not because I don't want to take it, but because it was just too close. So I just took an entry around there. I wanted to take one entry, or maybe I took an entry there, and I can't remember. Let me see. So I would have taken an entry here, and this market retraced, targeting this daily zone, because that was a high liquidity zone. I would still be in profit if I took that entry. But I remember I did not take any entry there. So how did I take this other entry? Let's say third entry? It was a retracement move. So I saw how I went to the 1 minute and I saw how the 1 minute moved. I saw that displacement. So I was looking for entry around that zone. So I saw this push here, this retracement. So I marked my entry around here. I marked my entry around here. That was where I took my entry. So I wanted to take entry around here, but I saw this pointer around here. That's why you see, I said, okay, instead of taking entry, you never take it here. Because of this 1 minute week. This market week stopped the market. So I took another entry here, targeting this exit liquidity. That's why you see me take this entry tag. If I have to take an entry here, I cannot target here because this is a high shrink point. So targeting here will hit my stop loss very, very well, and I need to target somewhere here. When you understand when. So when we took here, when we took our entry here, the market consolidated a little, moved past 11 o'clock, entered New York. See what happened at New York. We actually hit our CPI at New York just before the news time, which is what's the news time? 1:30. So because I knew that the news is coming. So when I saw the news coming, I knew that, okay, where's my third touch of the line? I knew we've not touched that line yet. But I was taking entries within this level because I knew they are within the third touch of the line. So look at where we hit the top touch of the line. Can you see this now? Let me mark it bold. This is so that's the line. That's the top touch of, that's the major line we are talking about here. Market hit that line. Can you see how market hit that line? And I had an entry there. I had an entry there also because I knew that the market might try to crash it. So I was just waiting for a crash. I know that the final effect will still be a pump because. So how was the dynamics of this entry? Dynamics of this entry is from the it's from the 5 minutes fair value gap. Yeah, 5 minutes fair value gap. Can you see this 5 minutes fair value gap here? This was the dynamics of this entry here. Why did I take this entry? Because I saw how the market pushed up here, filled, and I knew that they're going to come back to that zone. I knew that they're going to come back to that zone. If you look at, let me move this from here to here. I knew that they're going to come back to this zone. That was why I took this entry. And you can see this is where the market hit perfectly and jumped up. I knew they are going to come back to this first zone. Anytime I'm trading CPI, I look for the first move because look at this move on this market. This market has been bearish. It hit here, tried to come down. They made this pull. This was a pull that led to all this jump to this upside. The way I look at fair value gap, I don't look at fair value gap. Like now, a lot of people say this fair value gap is already filled. That's why it's invalid. If you keep looking at fair value gaps as being filled, that's why it's being valid, it will never work again. That's people looking for sniper entries. We don't look for sniper. We just look at a fair value gap that led to break of structure, led to higher highs. This is where the institution started making the move, not from even here. This was where the institution started making this move. This was too noisy. It was too noisy. It's too noisy. This is the first pull that happened here because we came here, came down. We tried because of this Asia, came down. We tried to move up again. We went down. So that is that. So so once the market breached this structure to the downside, we went up and you see what the market did. The market formed something here. This is what they call consolidation. So when we took this entry here, we targeted this liquidity. What I targeted this liquidity, I told you that I'm going to take out during CPI. Yesterday I made a video. If you can see my video I made a video. I'll reference the video to this one where I talked about this liquidity will be taken out. And they did exactly that. They took out that liquidity. I knew they would take out that liquidity. They took out that liquidity. So that was where my next TP was, around that zone. I don't know if I drew it well, but I knew my next TP was around this zone. My next TP was around this zone. So they took that liquidity. That was why I took that. So when they took out that liquidity, I wanted to see what the market would do there, so that we are going to take out this high and keep moving up. But what happened was we breached structure here. They took out these lows here. So immediately they took out these lows, the market formed a consolidation pattern as CPI news. Immediately CPI news came up, we had a consolidation immediately. So what happened? We started making a series of downtrends. We took out this low, made a new low, took out the next low. I knew that they will be coming to this low and we're going to take out this low, become the next liquidity zone we are targeting. That's why you see me making these moves here. So I look for the fair value gap that led to the break to the first. You see this fair value gap, you just need to know. You don't need to know if the fair value. Some people just, when they say fair value gap failed, they feel like the market trend has ended. The market trend has not ended. This is the first value gap that led to this crash. So it came down, came up, came down, filled that gap, and still meant I knew that they're going to either retest this zone or retest this fair value. That's why you see me making. You see this entry here and this entry here. I knew that they will either come here or here. That's why you're seeing these two entries. This one is to take out this AC liquidity. This second entry is to take out this liquidity. A market came and filled me in and gave me the liquidity. It didn't come to this side, so I was safe. So That's the dynamics of today's trade. So here I lost 1 hour here. I made 3 hour here. I made 3 hour here. So if you do 3 hour plus 3 hour, what was it? That's 6 hour. I made another 3 hour here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 hour was made today. And I lost how many hours? I just lost 2 hours. So if you do 15 minus 2, that was what? 15 minus 2 is what? 13 hours. So today we made 13 hours. We made 13 hours today. This was the biggest profit. That's why it's good to backtest. When you backtest, you see these things every day. Just backtest. That's what I can tell you. Backtest. Try and backtest, and backtest. That was how. And if you look at this, this is this is also first touch of the line. Let me see. This is second touch of the line. This is the third touch of this line. Because if we look at it as a trend line basis, also we have a trend line basis for this. This is I can call this I can say this is what first touch of this line. This is what this one led to break of structure. So we're going to say this is second touch of the line, and this is third touch. The third touch whether come here or here, but I knew that you see where it hit, just hit here, third touch of the line, and we're in. So that's it. So we made 13 hours today. This is one of the biggest profits on the CPI deal. Where everybody were recording losses. We were able to make massive amount of profit. This is the just from fair value gaps that we have filled. So thank you for watching. Thank you for your time.